If you've been reading any news about markets today, then chances are you're aware that US tech stocks just made an all-time high, the first time in over 2 years. But what might surprise you is that one of the biggest stocks, often considered the canary in the markets, AAPL, is not coming with it. And it looks like $180 continues to be a struggling point. So if this stock falls through, could it create a waterfall moment that goes across all markets? Today, we'll take a look at the unusual dark pool transactions that we've finally seen appear in the markets and the retail sentiment survey that will really surprise you. We'll also be looking at two charts that you need to be watching: the channel that's held this market up so far since the rally of October, and bonds versus stocks. They're starting to disconnect completely. Bond risk went down all week while stocks went up. Let's just say this is unusual, and today we'll look at the two other times this has happened recently and how it precursored the market. Join us as we cover stocks, commodities, and cryptos together. Well, welcome back everybody to the Daily Show where we talk about markets around the world. It was semiconductors up and the rest of the market mixed as we saw the core PCE number come out. But just a quick reminder, sign up for our free weekly newsletter as we have one coming up early next week that's going to be a banger. Name, email address, it's that easy, and you can do so in the links down below. Let's get into the data though today and some of the big macro stories that have been happening in markets that may be concerning and also could be incredibly good depending on whether you're an investor or a trader. First up, let's start with the bears. They're all gone. According to recent sentiment reports, we're only seeing 21.3% of people being bearish over the next 6 months, and that is one of the lowest reading reports ever. In fact, if you take a look at it, it means that we've remained elevated for a very long time now in terms of bull-bear spread. And if you could get rid of the neutrality, you would actually see that this is way higher than it's been in the past. Now, similar periods have usually led into overall pullbacks in markets, but it's still a little bit too early to tell from this sentiment indicator by itself. Where things get a little bit weird though was the core PCE. If you were looking at these numbers, then you would be aware that the core PCE is used by the Federal Reserve. And in fact, Jerome Powell came out early in February and said, we're going to reference this metric and we're going to call it super core. So this basically means that the Federal Reserve is claiming they care about this number, and it means a lot whether they're going to get interest rate cuts. And I'm not sure about you, but when you see a number like that, it doesn't look like we should get rate cuts anytime soon. In fact, it looks like it's actually on the uptick and we're running at around a 2.5% read. Now, it could be that the Federal Reserve's completely wrong and we're not going to go below 2%. The market's calling the bluff there. But the bonds market and the stock market had something very different to say about this result over the last 24 hours. And let's just say I usually go with bonds over stocks on the medium term. So if we're looking at a few weeks, I'm usually going with the bonds, not the stock market in that case. Ultimately, it comes down to a bit about what's going on in terms of sentiment. And speaking of sentiment, I thought I'd bring up this one quickly here because, of course, everyone's discussing Bitcoin right now. Now, do we expect Bitcoin to continue to rally throughout this year? In simple answers, I think the answer is yes, because we're in a halving cycle and generally it tends to be good. Also, we have the exchange-traded funds, which are a big deal as they bring in alternative asset investments, which usually hold the biggest amounts of money in the world. The problem is the speed at which we just moved, and we've already reported on this that we moved plus over 18% in only a few days. Now, we tend to usually see consolidation or downward movement from this point. So if you're feeling FOMO, I would say you don't necessarily have to on this market at this point. If you're in it, would I be terrified? Probably not. And this is a pretty replicable concept that we've seen happen many, many times in most rallies to do with Bitcoin. Huge moves, everyone talks about it, a bunch of sellers, a bunch of sideways action, and then hopefully consolidation into the next big move. We're also going to be needing to look at financial conditions because right now we're seeing financial conditions loosen, even though we haven't seen a rate cut yet. That's been helping Bitcoin and, of course, FOMO stocks around the world. Now, why are we saying that we need caution when it comes to Bitcoin? Well, think about NVIDIA. Whenever we've seen these huge multi-year highs coming off big earnings reports, they've tended to lean into sideways to down markets over the next coming weeks. In fact, the stats actually say that they're around 11% on average down over the next couple of weeks, and that we can go even upwards of 15% down. So it just shows you that it doesn't matter which market it is. When you get these big moves, everyone starts talking about it. That's generally not the best time to be in it. You do need to be early. And as Druckenmiller often says, it's better to be a pig in markets than a bull or a bear. Recognizing patterns and price action before other people actually start to see it can be your greatest edge in these markets. S&P 500 250-day rolling standard deviations. I thought this was an interesting one because what it shows you is that you might say the market is boring. And basically it is. It's a point where we're just kind of chugging up slowly, and it does usually mark a bull market overall, which we've been talking about for this year into next year. In fact, the stats are incredibly bullish overall as an investor. But the problem with it is we haven't seen some volatility in a little while, and if we continue with this under movement, then we're probably just going to keep churning up throughout time. And you might think that's impossible, but it is quite possible. And one of the reasons why is we might be in a new style of bubble. In fact, we talked about the idea of the rise of AI being ChatGPT and it being similar to other periods that, of course, were the rise of the internet, with a huge bubble being formed, some big dips that occurred in the markets, but overall a multi-year high that ended up being kind of catastrophic when you think about it. Could we be going into that? Let us know in your comments down below. Another one that really marks it here is that we just had one of the biggest long streaks without a 2-year high. So this is an end of long streak without a 2-year high. We've made the 2-year high. This is the 5th longest streak in the indice's history of not making new points. And you might say, well, that means we've got to sell off soon. Maybe we get a correction. It's possible. But in general, we were usually going to see overall strength throughout that period in time. And we've been reporting on this quite a lot, using some data we'll talk about in a moment. Now, if we are going into a market that's going to be better moving forward, let's say March has a bit of a sell-off, then we go into April, May, June, those types of periods. What is going to outperform? Well, we've been talking about mid caps being incredibly strong. And of course, recently, large caps have been the strongest for the beginning of the rally. And it's pretty normal. Large caps usually come first, mid caps usually come second. And the third one is generally going to be the small caps, the Russell 2K. And it almost broke to a new all-time high, well, over the last couple of years, not all-time, but multi-year high, with over the last 24 hours. Now, if it does manage to get through this zone and close the weekly, I think that's a huge deal for Russell traders. So as we've already reported, the Russell's starting to improve. Year-on-year EPS growth is back in the green in comparison to being horrible throughout 2022 and 23. So it could be the market that we need to be looking at over the next 6 months, especially if we get a sell-off that comes through in March. Now, what's going on here? Well, Wayne, of course, has done a study showing us that from December all the way to Feb, if we had positivity, then we usually led through to being very green. 25-0 was the run, and we've seen many stocks here in terms of what's been happening from the individual months. There were some pullbacks, upwards of even 5% sometimes, but we didn't necessarily have a catastrophic failure in the markets. 25-0 is a very strong run indeed. If you're based on seasonality, then you'd be a little bit disappointed right now because, of course, February, the back end, didn't start to sell because of Nvidia and the strong earnings. And we haven't seen any real significant weakness that we tend to see in March just yet. But it may be coming around the corner according to the bonds market. So we'll look at that very soon. Now let's talk about which ones are usually worst. Usually it's NASDAQ, which just made a new all-time high. And then we've got the Russell 1K and 2K that tend to lose the most overall. What are the reasons why we could sell? First up has got to be options. Of course, we know calls are incredibly elevated. Are they the highest they've ever been? No. Could it go much higher? Absolutely. But it's something we're looking at. We also know that suddenly the best strategies in the world seem to be, let's go sell some puts. And that's usually a dangerous thing. In fact, over the last year, if you've been selling at the money puts, you've been doing about a 13.8% run in terms of overall gains. Of course, you haven't been doing too well if you've been selling calls. And the stock market, up until recently, wasn't doing so well. But then, of course, since October, it's boosted to beat out all of these options right strategies. That being said, though, one of the favorite strategies at the moment is selling 25-day puts and buying 25 days. And this is something that you're going to be looking at going, I'm not too sure about that one. CTAs, what are they doing? We've got some updated data here. Well, it looks like the S&P CTAs are getting crazy. New all-time high in terms of the recent reads we've seen here from CTAs. So that's pretty strong. obviously showing that they are maximum in terms of overall in the market. And there was a little uptick on the NASDAQ, although it remains less elevated than it was last time, with a little bit more caution and some selling coming through around this earnings season. We talked about Chinese stocks obviously coming into the Lunar New Year. So far, so good. They've lost a little bit of ground over the last 2 trading sessions, although some have been up. But overall, different markets, abundance mindset, the concept we talk a lot about here on the channel. There are opportunities in many other markets. Speaking of opportunities, there may be an opportunity coming up in energy. We didn't see a break over the last 24 hours, but we certainly have an amazing alert to be set later on that we'll share on this channel. And just a quick announcement as well, we'll be launching a little bit of a section on this channel where we'll be talking about everything to do with the markets and maybe some individual stocks. So when we're doing, each day, we'll look through maybe an individual stock or two that we'll showcase, which we don't always do. Usually we're covering Tesla and the mains, but I'll start to bring in a couple of showcase stocks so we can do some learning together. Make sure to subscribe for that if that interests you. Brent CTA is up. Good news for, of course, oil traders underneath the hood. And we also see US oil traders up as well. So no breakout in terms of price action yet, but CTAs have been buying at elevated levels. Speaking of markets and elevated levels, let's talk options now. First up, let's bring up this one, which is, of course, the S&P 500. We know 5,100 remains a huge call wall. Basically, this is such a huge level that if we get through 5,100, we could explode to 50-50 relatively quickly, and then, 5150, and 5,200 is certainly not out of the question. At the moment, the bears are going to be hoping that 5,100 fails to get a closure above, because this is a big deal for market traders, and of course, it could mark the next level of momentum movement. Another one that's going to be needing to watch is, of course, everything to do with Nvidia, and we know already 800 is the major strike level. We also know that around this 755 level will be a big switch for Nvidia. So while it's sitting in this range, it remains positive overall, although the stats and data would suggest that weakness could be coming for that stock. And if it gets below 755, then it could be a very, very quick sell underneath that level. So 755, 750, a big put wall to be broken through. Now let's go into some unusual data and options movements, volume movements that have gone through markets. Now this one was before, and I forgot to share it with you guys, but it's got to do with Mara. And Mara got absolutely slammed over the last day of trade. But notice this, some big transactions coming in at the high, and then suddenly it goes down big time. Now you may have thought they were buys, but they certainly weren't. Now it's up to us to figure out what's going on here. Nvidia with one of the biggest trades it's ever done since inception. Number 2 and number 1 was over here. Number 1 led into a monstrous buy last time, although it was consolidation for a large period until number 5 came through. Now we've just seen a monster trade in Nvidia at these highs. So is it a sell or is it a buy? I'll let you guys in the comments decide and figure out which one you think it is. What about bear shares? Well, it turns out that someone's betting relatively big on Apple. Now, this is one of the biggest trades, in fact, is the biggest trade that's ever gone through this particular pair. And it could be that it's a buy. It's possible. But generally speaking, it's a dark pool transaction that comes through right as Apple pressures this 180 zone. Now, we talked about it being the canary. If we see a breakout through, we know there's activity all over this strike. So that's going to be one that we want to be watching. Another big trade coming through as well on the S&P 500 Vanguard fund. This is a big fund, so we know it matters. And it may mark a very pivotal point here for the S&P 500 at 5,100. So we know that it looks like it's a sell, although recently some of these have even been consolidation buys. Let's move over to the last one here, which is the Qs, another large transaction. We can see that there were previous large transactions at lows, before the resistance, and at the highs over here. So realistically, we don't know whether it's a breach out, this one, or it's a sell. And at this stage, you would think it's probably a buy from at least the price action that happens straight afterwards, taking us to a new all-time high. Although, with any of these, remember, they don't have stop losses like you or I might have in trades. They generally are positioning in. Let's now go over to options. Bitto, ProShares Bitcoin strategy, 16 times the average 90-day with a huge call volume coming in. And I mean huge. Look at the puts, 42 versus 1272 in terms of the calls. That is one of the wildest in terms of overall put percentages, 3.2%. But we do have some big trades coming through across the board. AMD continues to fly, closing in on the 200 here. And Snowflake, one that we're focusing today as part of our new stocks we're focusing on, down 18.1%. It was actually down more before it recovered through the session. C3 AI as well, up 25% almost. And Okta, another one that everyone was talking about. It looks like 2021 again in some of these stocks with the movements that are occurring. 43 million, 60% call, so a massive call rate, and 29% of retail traders were in it. Let's now move into the charts though, because there are some weird signals going on. I mean, weird. First up, we have here a report, which I've talked about a few times, which has been an uptick in overall high yield options volumes. Now, this is not necessarily a good thing. In fact, when this ticks up, it can also mean that the markets are about to fall over. Have a look at the read we got back in December of last year. We started to uptick, and then if you remember, the beginning of January actually was a sell for markets, and we saw quite a wild switch that starts to poke its head out again here out of nowhere over the last couple of sessions. Overall, Federal Reserve liquidity feeds and, of course, central bank liquidity feeds remain absolutely plastered to the same level, so nothing coming out of those ones just yet. And we do know as well that yields did drop, which is surprising when you think about it. But the market is basically saying, you know what, probably hit that supply. It wasn't as bad as we think. Maybe we'll be able to push the markets up a little bit higher from here. Now, where that isn't in agreement is in some bonds. Now, high yield junk bonds, one that most of you would look at, is been consolidating for a while. Now, this consolidation will eventually breach. And of course, it's going to be fun to watch the types of large moves that's come off this. But as you might be aware, we've got our own indicator on this one in terms of how we read bonds. And you might see as well that if we go back over to the early points of December or late December, early Jan, that we had these three massive sell-off days that were led by, of course, the market also selling at the same time. We also had a little bit of a sell that occurred around this period in the markets. And guess what? We're coming into the back end of Feb, which happened last week, and we saw sell. Now, that's a huge level of selling compared to the S&P 500 moving up. And the last two times, it caused markets to have some issues. Now, I am a big fan of reading bonds, and if you know how to look at them, to me, this is definitely a warning in markets. Although it is not a new low, which of course you're looking at, it is certainly a warning. It's a precursor with absolutely no price action shown in the stock market just yet. So it would be a guess, and therefore, if you're going to guess, you would have to have very good risk management. Options market, that's the only way you'd really be doing it. And of course, you'd need to know what you were up for. Let's now move over to the US dollar and talk about that because it's been up, down, all around. Now, I've obviously favored the idea that maybe we were seeing the euro breach to the upside. At the moment, that isn't occurring. We're actually seeing the dollar start to fly a little bit higher. And that's, I think, based on higher for longer rates. And of course, this is a convoluted point now. Still, I like the idea that the euro might have breached out. We'll see whether it can hold over the next 24 hours. And as I mentioned, this is the power of scaling and only using a portion of your overall investment until the market actually goes in the favor that you expect. If you're going to be early like a pig, like Druckenmiller talks about, then you're better off using markets money, that is profit that you're already starting to make in the trade, to add to your position and get into your full position. In this case, it looks like the dollar index is trying to breach up and therefore make it to that 105.80 level, but we don't know yet because we haven't got the weekly close. Friday could be an interesting session for currencies. Speaking of big trades, oil, 2 rejection wicks. I am going to love this if oil breaches through that 80 zone. If it does do that, I think it's on for a very big move and there is going to be so much volatility coming into the markets. 2 rejections from oil. No doubt most people are going to be bearish on this now based on the analysis. Obviously, if it makes a new low, there could be some people that are going to start triggering into this. I think this is the most important level, which is around the 76 strike for the sellers. That's going to be a huge level as well. A good trade coming up on oil, either side will be watching very, very closely here. And one of the reasons we're watching is this pattern we talked about earlier this week, which is USO versus the SPY, consolidating, breaking to a new low, obviously then rallying up. And if it breaches through that 0.15 ratio, it could be that energy stocks come out of nowhere and start to outperform the market. So something we will be looking at. Let's move over to gold. We favored the upside, even though it was definitely in the most traded zone question mark. And it is on its way, you would think, to 2055, 2060 again. Could it be the time that that gold starts to actually rally up because Bitcoin's been doing so well? Well, I think gold extremists, people that love gold, they would be absolutely looking forward to this, and they would be looking for it to breach through trend lines, get through this high, put a weekly close in, and then get that thing to a new all-time high. It could be time for gold, and of course, this is starting to heat up, especially if the dollar did end up weakening and going down again. Let's move over to Tesla. A bit disappointing here for Tesla. It was flat as a tack. It is still holding above 200. I still favor the long side, and obviously I've talked about the fact that I think credit selling was the best over here. And at this point, the market is still just hodling up when it comes to Tesla, and it just keeps consolidating and slowly making new highs. A breach out of this zone up here, which is around 205.70, will be, you would think, a momentum move for the stock during the day. What about Nvidia? Not much on this one. Up 0.77 after hours, 1.87 on the day. We still think it's in consolidation mode. We know insiders sold here, not that that means that much, but we also know that the stat usually is sideways to possibly even down. So I think it's going to be in a little bit of consolidation now. 3 sell-off days, a 4th one, and then just dojis everywhere. So indecision on Nvidia. SMCI continues to be a bit meh. There was a move here with 6%, but it still dropped after we talked about it, all the way from 1,000 down to 866. It's probably going to look something like this, I would think. And SMCI remains, as we spoke about, probably in a 3-month channel. Now we move over to possibly the most interesting stock in the markets, possibly the most interesting chart in the markets outside of looking at bonds. And that's the 180 level on Apple. It really is struggling, isn't it? So it keeps coming down to this zone and keeps rejecting off it. So for buyers, take a look at this. We've had 1 week, 2 weeks, 3 weeks, 4 weeks. We keep getting these little buy signals. So for day traders, you're loving this because you're just trying to buy that 180 base and hoping it will go up, putting little stops below. So far, so good. And if you looked at it, you would think, wow, 1, 2, 3, this is going to go ramping. It's going to be a great trade. Risk reward's probably there, but imagine if it falls through. And we mentioned the idea of a waterfall moment. Basically, that's where you start to see markets crack across so many different instruments. And part of the reason we run so many pairs on this channel is to show you that they're all connected. So many markets are connected, and there are reads that you could get on oil that could help you with a stock or vice versa or whatever else you were doing. So Apple here, 180 closure, daily closure will be key. We keep getting underneath 180, but you can see here the wicks. What a chart, worthwhile watching. Let's move over to the Mag 7. You can see here just hodling around, doing nothing. So not much there from the Mag 7 read. We move over to Snow now. Now, this stock dropped a lot, but the good news is it had big volume, which we already knew it would, which is buyers and sellers, and it managed to put in an okay day. So things are looking a little bit better here in terms of buy the dip, people. Now, we do want to see a new high being formed, but in general, this is a decent sign. We've held this level here, obviously took the low. Maybe Snow is going to find a buyer. And if it does, it could be a little bit of a relief rally. That being said, very dangerous stock. Obviously, there's huge moves that can happen here. We saw something with Pan W, got saved by Pelosi as well on that one. But overall, yeah, Snow finding the low. It's a risky trade, but at least it did hold a green through the session in terms of where it opened from. What about the Chinese market? It's taking a breather for now. We saw CQQQ come back pretty good, and a lot of Chinese tech stocks came back good. However, we saw the Hang Seng obviously just kind of flailing around this 20. It could go down to 16,000 for sure. This market obviously is in a recovery phase that we've been talking about. So I think this is very, very possible. And ideally, I'd be looking for still a little bit more long out of this market, but we are looking for technical turns at this point. Aussie market made a new all-time high, got every newspaper ever to write about it. I saw a lot of alerts this morning come through. This is a good level. I'd like to see a weekly close above it. And of course, ultimately, it's going to come down to oil as well. If oil breaches to the upside, I could see the Aussie market doing very, very nicely. It's quite concentrated into oil, metals, and financials. US 2K hit the peak and then rejected. I don't know what to make of that yet. I mean, obviously, I like the US 2K, although I don't like really KRE, so I like more the growth components of them. They have been doing very different to this stock market, but We're looking for a breach and a big weekly close. We haven't quite got it yet. We'll see how it fares on Friday. But for now, it's a maybe pullback in March, and we still favor the Russell moving forward. Let's go over to the NASDAQ. So the NASDAQ's making all sorts of newspaper articles about how it made a new all-time high. Technically on the futures it didn't. We've already seen this high before. 18K was not really respected. Like you can see here, it came straight into that 18K, sold aggressively off it because we knew this is where supply was. And the bears got destroyed once again, pushing straight back up. I would say question mark here. Obviously, it does look strong on the paper because you're going to be looking at this and saying, look at this flag, I'm going long, etc., etc. I think there's better single stocks and sectors than the indices right now. But if you're looking at it just on the paper, you would say it's long overall, and most people would have stops under here. So you can see that if it gets through that level in the future, it's going to take a walloping. And that's going to mean Apple's through 180. So again, some levels to watch if you prefer to have patience here. Nothing changes on the US 500. Very, very similar. Trying to get a new high. Again, people are drawing flag comparisons. It remains above the daily 20 moving average, which means all swing traders are still long. And the real concerning part here is just the bonds versus the stocks, because this is unusual to see them so disconnected. And if bonds are doing it, then generally that means the stock market is making a mistake. How long does it take though? Well, we'll be looking for the price action signs. Currently, still bullish, guys. No changes there. Bitcoin, sideways action is what we expect. Sideways action is what we're getting so far. 1 day of consolidation so far is not much, but obviously we are consolidating, and that all comes from this huge volume spike where we saw it go both ways. Big seller came in here, and although volume's elevated, and don't get me wrong, I'm a huge fan of the ETFs. I cannot tell you how much alternative asset investing, even if it's just 1 or 2% of the big managed funds out there in the world, is going to go into crypto, but I could see it having a bit of consolidation. Also, congratulations to Ethereum hodlers. If you were looking at it, although we were 2% off there, guys, or maybe 3%, Ethereum still performed well. 3,500 hit and smacked straight back down. So nice hold. Ethereum was certainly one that I preferred from the TA perspective, although Bitcoin ended up doing 2% better. Just a quick reminder, throughout the weekend, make sure to subscribe to our newsletter because we do have a big one coming, and that's as easy as name and email address and put it down below. Thanks so much for watching, guys. I hope you're having a wonderful day, and of course, subscribe to the channel and hit that bell icon. Have a great weekend. We'll be back with you covering everything. Friday, of course, will be a big session for the closers, and I'm excited to see what happens next. Lots of opportunity out there, whether you're a bull and bear. And even if you're a bear in markets, remember there are other bull markets for you. Bye for now.